Imagine you earned $1 million this year. The government wants 30% of it. That's $300,000 gone. Now imagine someone told you there's a perfectly legal way to keep almost all of it. No tricks, no jail, no problem. That's not a fantasy. That's Tuesday for the ultra-wealthy. Today we're going inside the secret world of tax havens, where billions of dollars disappear and nobody bats an eye. Stick with me, because by the end of this video, you'll never look at a billionaire's charity the same way again. Let's start from the very beginning. Taxes exist for a reason. When you pay taxes, roads get built, schools open, hospitals run, and streetlights stay on. It's basically a group subscription fee for the country you live in. Now, back in the early 1900s, most countries didn't even have income tax. Governments were small and spending was low. But then 2 world wars happened. Suddenly, governments needed money. Lots of it, so taxes went up. Way up. In the 1950s, the top tax rate in America was 91%. 91%. That means if you earned $1 million, you kept $90,000. The government took the rest. Now put yourself in the shoes of a very rich person in 1950. You've worked hard, built a business, and made real money, and the government wants almost all of it. What would you do? You'd find a loophole. And that is exactly what happened. Wealthy individuals and corporations started moving their money to places where taxes were tiny or zero. These places had one job: attract foreign money and ask no questions. We call them tax havens. And they've been quietly running the world ever since. Switzerland was one of the first big ones. All the way back to the 1700s, Swiss banks had strict secrecy laws. Nobody could find out whose money was in there. Not foreign governments, not the police, nobody. Kings, dictators, criminals, industrialists. Everyone wanted a Swiss bank account because what goes into Switzerland stays in Switzerland. Then other places caught on. The Cayman Islands, a tiny British territory in the Caribbean, has a population of 70,000 people but more than 100,000 registered companies. That's more companies than people. On an island you could drive across in 30 minutes. How is that possible? Simple. Zero corporate tax, zero income tax, maximum secrecy. The money didn't physically go there. It just existed there on paper. And that's the key to understanding all of this. Tax havens aren't about where your money is. They're about where your money says it is. Okay, let's get into the real stuff. Let's say you run a giant company. You sell products in America, in Europe, in Asia. You make $10 billion a year. In America, the corporate tax rate is 21%, which means you owe $2.1 billion in taxes. But your very expensive accountants have another idea. Here's the trick. It's called profit shifting. Step 1, you create a tiny subsidiary company in Ireland, Luxembourg, or the Cayman Islands. Step 2, your real company pays the island company for using its patents, its logo, its brand name. Step 3, those payments are counted as expenses. Expenses reduce your profit. Lower profit means lower tax. And the tiny island company, it just collected billions in fees, taxed at 2%, 1%, or sometimes 0. This isn't illegal. This is just the game. Some of the biggest companies in the world do this. Tech giants, pharmaceutical companies, banks, they sell products to you and your country. They use your roads, your internet, your courts if something goes wrong. But when tax time comes, the profits are somewhere else entirely. One famous arrangement was called the Double Irish, where a company would set up 2 Irish companies and money would flow between them in a specific pattern, ending up being taxed almost nowhere. Ireland eventually shut that one down. But don't worry, the accountants found new ones immediately. They always do. But it's not just corporations. Regular ultra-wealthy individuals play this game too. You set up a shell company, a company that exists on paper but does almost nothing. You transfer your assets into it, your art collection, your yacht, your real estate. Now, technically, you don't own those things anymore, your company does. And your company lives in the Cayman Islands. You still use the yacht, you still live in the mansion. But on paper, you're barely worth anything, and your tax bill reflects that. Here's the scary part. Experts estimate that somewhere between $8 trillion and $36 trillion is currently hidden in offshore accounts and tax havens worldwide. To give you some perspective, the entire US economy, everything produced in America in 1 year, is about $27 trillion. The hidden money is bigger than that. And that money doesn't build roads, it doesn't fund hospitals, it doesn't pay teachers, it just sits there, growing quietly. For decades, most of this was invisible. Governments suspected it, economists warned about it, but there was no proof. Until the leaks began. 2013, the offshore leaks. 2016, the Panama Papers. 2017, the Paradise Papers. 2021, the Pandora Papers. These were massive document leaks. Millions of secret files from law firms and banks inside tax havens, released to journalists around the world. The Panama Papers alone contained 11.5 million documents from a single law firm in Panama, exposing 214,000 shell companies. The names inside included world leaders, billionaires, celebrities, criminals, people from over 200 countries. One detail that stood out was a single building in the Cayman Islands called Ugland House, listed as the registered address for nearly 19,000 companies. 19,000 companies, one building, the size of a small house. That's not business, that's paperwork. The leaks caused outrage. Governments launched investigations. Some leaders resigned and some countries changed their laws. But here's the honest truth. The net is still full of holes. Because the people who benefit from tax havens are often the same people who fund political campaigns, hire lobbyists, and shape the laws. Changing the system means changing rules that powerful people wrote for themselves, and that is very, very hard to do. But something is changing. In 2021, more than 130 countries agreed to something historic, a global minimum corporate tax of 15%. The idea was simple. No matter where a company claims its profits are, it pays at least 15%. No more race to zero. Is 15% enough? Most economists say no. Is it perfectly enforced? Not yet, but it's the first time the world agreed that this game has to have some rules. So let's bring it all together. Tax havens aren't some shadowy criminal underworld. They're a legal, sophisticated, globally connected system, built by smart people, maintained by lawyers and accountants, and used by corporations and individuals who can afford to play the game. Here's what it costs the rest of us. The IMF estimates governments lose between $500 billion and $600 billion every year to corporate tax avoidance alone. That's money that could have been schools, cancer research, or your tax cut. Now look, this isn't about hating rich people. Some wealthy individuals pay every dollar they owe and more. This is about a system that wasn't designed for fairness. It was designed for flexibility, and the most flexible people are the ones who can afford the best accountants. The next time you hear about a corporation paying almost zero in taxes, or a billionaire whose wealth somehow keeps growing while their tax bill shrinks, you'll know. It's not magic. It's not luck. It's the system, working exactly as designed. If this opened your eyes, share it with someone who thinks taxes are just a rich person problem. Subscribe for more videos that explain the world in a way that actually makes sense. And drop a comment below. Did this surprise you, or did you already know the game was rigged? I'll see you in the next one.